Right. Mr. Dilip Bhat has been with us. Dilip, what do you make of the market? Do you think that 2015 will also be as good as 2014? What are the key events that you would be eyeing out for in this new year?
Well, I think 2014 was like a dream for the stock markets. 2015 may not show the same intensity in terms of the gains, but possibly the direction is firmly entrenched, and that is the channel is upwards. And probably within the channel, we may see that there could be some fair bit of corrections or consolidations. But we have to see this market over next couple of years, where hopefully in the next couple of years, this year probably will give a lot more visibility as to how we are going to reclaim the growth of around 7 to 8% in the years to come. And I think that itself will set a lot of expectations. So I think in this year, possibly what we are going to look forward is what kind of action the government takes. So one set of action is which is a kind of an enabling them, that they are putting a lot of solving a lot of the issues. The other issue is how do you kickstart or pump prime the economy. So I think both the things are parallel by itself, and both will be watched very closely. And it is the pump priming or the kickstarting of the economy, which is what probably also is the need of the hour. So you have the momentum in place. So that will be very closely watched, and that probably will be seen by their actions in the budgets, or what kind of actions they take in, say, in the infrastructure to solve some of the problem, because that's one area where the ball can get rolling by removing some of the logjam issues. So I think these will be some of the things, and of course how the global economy really pans out in terms of its impact on India, because the first round of positiveness has been played out. The second round of apprehension is what is prevailing in the market at the moment, whether it's leading to a demand collapse, whether there's a recession or deflation coming in the world, and how India is going to position itself. So I think some of these things probably will be very keenly watched amidst some of the actions, whether the interest rates are going to come down, whether the rupee is going to be volatile.
What will be the key thing in the budget that you would be eyeing out for, in terms of intent coming in from the government? What would you be looking in at in this upcoming budget?
One thing is definite, that the government appears to be very keen on resolving a lot of issues, which I call it enabling kind of actions which the government is taking to make a lot more things easier, loosen up the knots which are really creating problems. But I think, as what I said, this process itself is a long drawn process. So on the long term, it's going to benefit. In the immediate thing, the steps that the government takes to address, say, the problems besetting the infra sector as such, there are a lot of things. If some of the steps which government takes, that can really open up the sector for the infra as well as for the banks, more so for the PSU banks. So what are those steps in the nitty-gritty is what probably I would be expecting, because that can, if you have the infra projects where nothing can stop you, neither the international event or none of those or any other immediate domestic problems can really stop the commencement of the infra in a big way, and that can have a good multiplier impact. So I think something to do with this particular kick-starting, or say even in fiscal managing your the overall fiscal situation, whether you're really going hammer and tongs at plan expenditure like what the previous governments did at the expense of the growth. Now we have to do something slightly different to see that the growth is revitalized and that the plan expenditure continues to be on the track. Easier said than done, enough challenges, but still I think some of those things which is what we will be expecting, so that the economy really starts gradually growing in a reasonably much more comfortable way.
Right. You earlier had told us that you like a couple of names like Tata Motors, Motherson Sumi, Britannia. Motherson Sumi and Britannia have done phenomenally well. Tata Motors, however, versus the auto pack has not done that well. Do you still like that name? Do you believe that it will play a catch-up role?
Well, I think Tata Motors still continues to look pretty good and interesting. More important, it is still available at a very reasonable valuations. That is more important. I think some of the international events which is going to have an impact on JLR and the sales of some of its products is what is really worrying the market, and those worries have not really gone away. But I think slightly on a longer term basis, this particular the JLR, we still are pretty optimistic that overall, taking the different parts of the world where JLR is being sold, I think on a net basis, probably they will still continue to show a good optimistic growth. But I think the second part, of course, is the revival of the CV cycle in India, which can provide a fair amount of tailwind to the stocks and in terms of perception. So I think both the things taken together, I think Tata Motors still holds a good promise.
Right. IT numbers will be coming out in just about 8-10 days from now. 9th is when Infosys declares their numbers. We have, spoken to a lot of analysts, and even Mr. Pashupati Advani, who was there earlier, was telling us that there can be a drastic change as far as their commentary is concerned. What would you be eyeing out from, apart from the numbers, in terms of commentary of these large cap tech companies?
So of course, this for the IT companies, this is typically the quarter where the performance, when the number of working days are the least, so that has direct impact on the revenue and the profitability. But this time, I think there's a lot of currencies which have taken a beating. So how those currencies are really going to impact the immediate quarterly results, and how they're going to pan out slightly on a longer term basis. To give some comfort, I think the US seems to be growing pretty strongly, but whether it would translate in terms of better price realization for their services, one is not very sure on that. The volume growth is also, there is some traction which is available. So I think the commentary on the US and its consolidation out over there, and Europe and the rest of the world, how they are going to impact their growth, or whether they will neutralize each other. I think these are some things which will be watched very closely.
Banking sector has done phenomenally well in the last year. So a name like Axis, a name like Indocent, even the PSU basket has done very well. Would you still be overweight on the banking names, the large cap ones?
Without any doubt, I think the banking, despite the fact that the credit growth continues to be very anemic, I think the NPA still pose a very formidable problem for for the entire banking sector. So I think some of those issues probably will gradually give way to a lot more optimism on both the fronts. And I think some of the government steps also for the PSU banks in terms of segregating the role of the chairman and the MD may lead to a good management re-rating, because even if they manage to get one or two very good guys from the private sector as a chairman, I think it will have a very contagious impact on the entire PSU banking sector. So I think banking still continues to be the preferred sector, and more so the PSU pack within that.
Right. I was talking to some of the banking analysts earlier, some top banking analysts, and they were saying that still private banks are looking much better. And the point that, you mentioned that a lot of these managements, how they can change PSUs, they believe the management of the private companies are very, very strong. A lot of innovations will happen, which will further lead to better ROEs, better return ratios. Is that something that you see even for the private sector names, that the current management will be able to do a lot more innovation and will be able to lead the growth in the sector?
So I think for the private sector, it must be said to their credit that in spite and despite the kind of economic scenario that India went through, they held their fort very well. They managed to escape from a lot of those hit on their profitability, on their asset quality. They have really navigated this very well. So I think that says a lot about them. So as the times improve, I think overall they probably will be the first of the block to take advantage of the changing scenario. So my own take is, of course, they will continue to lead the pack. They will continue to be in the forefront. But my own sense is that in terms of appreciation, probably the PSU banks will give much better. But there is no doubt that they will maintain their lead, they will maintain their edge in terms of technology and in terms of the management.
Right. Dilip, just before we end, you've been a very long investor in the market, or you've seen the market for very long. Going into 2015, what would be your advice or, as a resolution that new investors should take before they make any investments in 2015? Any discipline tip that you would like to give them?
I think for the retail investor, for the small investors and the individual investors, I think next couple of years, next 5 to 10 years offers a very splendid opportunity to really build a portfolio. And I think patience is the name of the game. This class of asset you must be owning, you must be really over owning this class of asset. It has to be a good blend of the mutual funds, your PMS and your direct exposure to the equity. And I think the temptation of trying to really do some short-term trading is something which I think they should avoid, because any loss over there can really be very disheartening, and it may rather not encourage them to invest something more in the markets. So some of those things they should be careful of, but I think hold on to the stocks and take a blend of these 2-3 routes, and take your time frame as 3 to 5 years, and I'm sure I think that they will make a reasonably very good return over the long term.
Right. Dilip, I understand that you have to go, and we would have liked to continue this discussion for longer, but next time, we should probably take this forward, and what can be any other advice, how to identify the companies for retail investors. Till then, Happy New Year to you and your team at Prabhudas Lilladher going into 2015. Thank you so much for joining us this afternoon on NDTV Profit.